The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Good to be with you again. Wednesday night here in Asia. Here we go. Let's take a look at our S&Ps really quick. Let's get these up. Let's see that we kind of veered away from trading this from the long side. We talked about, this index is obviously lagging the rest of the world. We've had to kind of come back in past that 240 unfair high at 2090, 2091. That's what we talked about. We got stopped out a while ago. We talked about not taking these trades above, and now we're back within the fair auction. Why is that so important? What I want to do is pull up our scanner, and right now I've actually been playing around with our newest version of this. We've got a little bit of a heat map in here, which I think you're going to love. I'm going to have Demantis on a little bit later to talk about this. And as I look at our speed dials down here, and this is going to have all the ETFs in it also as a big, big heat map. And you're going to be able to kind of look and see what's driving the market as far as what sector. But right now, the speed dials I'm looking at on the S&Ps were a little bit crossed up. Daily's still negative. We're going to obviously have some earnings-related stocks kind of powering up or down this morning in the U.S. But what we're going to eventually see, I think, is after the dust settles, we're going to see the U.S. stock market continue to drift down and possibly retest that 2068-69 number. Now, the big news around here this morning in Asia was the yen and Nikkei situation. So as we look at the Nikkei, we're looking at the June contract. The big news is, we got past 20,000. The index did. This is, I think you haven't been here in 15 years, something like that. It's been a long time. But we want to look at the yen as it's related to this. By the way, before I forget, Steve Rhodes is doing a two-part webinar series. I want to just kind of go ahead and throw that out there. It's on the homepage of the TFN website, Thursday, May 7th, Thursday, May 14th at 6:30. Steve knows what he's talking about, and this particular webinar series, I personally feel is going to be one of the best he's done. So, if you don't want to miss it, take a look at it. Maybe you can sign up on the homepage. Just want to throw that in there. As we look at this Nikkei, and we look at, now we're starting to trade above profiles. We talked about not shorting the Nikkei. We got clean and clear through that 20,000. But let's take a look at the yen, because some of the news out really was, and this move up in the Nikkei and some of the, somewhat moved down in the yen. I would have expected a much bigger drawdown in the yen, or more valued yen. In fact, the yen goes up against the U.S. dollar in this particular chart. It means the yen's getting devalued. Well, it came back a little bit today. And why was that? They had some decent economic situations. First time since the Fukushima nuclear plant blow up, where they started actually kind of showing some numbers, getting their act together. They pretty much related it to crude oil and a one-time little thing. And they expect by the time we get down into April's numbers next month, we're going to see the same type situation in Japan. So I think that gives you even more of a reason to start buying the yen against the dollar here, as the yen will get devalued. I think 140 is not out of the question on this product. We're just still looking for support in the yen all the way up, and as it's provided to us. So the next breakout, to sum up what I'm trying to say, is going to be above 119.68.69. You got to buy those on a closing basis on the dailies, and you got to buy pullbacks in the 118.76. Make sure you put your stops in on those particular types of trades. All right. We're going to leave the euro off because I think Demantis is going to be on with us, and we're going to talk about that a little bit. But let's take a look at the dollar just to kind of sum up what's going on here. Not a lot of change, just kind of rattling around as we had talked about inside the fair auction between 98.75 and let's just call it 97. Those are your two big inflection points there on the U.S. dollar. I wouldn't really do anything until we got out of the box there. And And what does this mean long term? Long term, I still think this is very bullish. As you can see, buy support higher, kind of crunching up in here, even though we're rattling around the past couple of days. This is the type of action you want to see for the dollar to move higher. Let's go into the DAX. This is something that we've been kind of keeping our eye on here on the daily. So got a new box appearing above today. That was really, really damaging on the short side for the price action here. We kind of came back into this 12,000 area. We got back, rallied back above, and then now, to me, it seems like we're showing some clear signs here that maybe we might drift down in the DAX. And now you've got this box that appeared above price action when we came out today. That's pretty bearish. Let's take a look at the short-term numbers on the DAX really quick. Here we go. 11,711 down below. And obviously now you've got 12,000 to 12,100 approximately, and that's based on these new inflection points on the daily. So you got a little bit of a DMZ you got to worry about up there with stops above 12,100, let's say, and you got some targets below 11,711 right now in the DAX. Gold, not a lot to talk about here, still just kind of rattling around. Here's the daily situation on gold. Talked about really nothing doing. Stops below 1182 still on the gold contract. Silver, an even sorrier situation here. 1660 never was breached. And, if you've been kind of playing around with this on the long side and holding on to it, you're going to have a new profile appear at some point. And, you could be looking at, just to complete this fair auction down, just to prepare yourself, 1558 and possibly even lower. You got to kind of watch out for that. Make sure you put your stops in on these trades. Next major leverage points, 1558, 59 on silver. Nothing doing in the grains, not a lot different. Corn's kind of drifting lower, so are beans, but nothing big there. Let's take a look at our, and I thought I'd change this. Let's go into our, the correct contract on crude. The June contract. We've pulled back a little bit here, nothing major. And again, we got a new daily box appearing. This is great for crude oil, 55.30 on the June contract, stops below there. I'm still a big fan for this thing, reaching for the sky again. A little bit of a relaxing mode right now, but let's take a look at the XLE while we look at that. Okay, as we wait for this to come up, XLE is right on support, kind of similar to crude oil, 80, 70 and some change right now. We're sitting right a little bit right below there. You got to put your stops in on these type of scenarios. Crude may rally, crude may come back in. The XLE is somewhat dependent on it, but on a relative strength basis, a lot stronger situation. If you want to just, find a time to take some profits off the table on this trade we've been talking about since the 76 and even the 74 area, this is kind of a little bit of a stingy situation. You can put stops down below and just let it stop you out if that's going to be the case, or possibly bounce. And when we look at the next wave down, this possibly as crude oil may break some of the support, it's looking at around 79 is going to be next support in the XLE. So again, keep those numbers in mind. Let's go into the XLF. This is really acting well now. We've gotten into that weekly unfair high. Now we've got back below the, I'm going to talk about that in just a second. We've gotten down below the 24.28 daily unfair lows. So now the XLF might have some clear sailing down south. Where's the targets? I think you're just going to let the 240s regulate this. We're trading 24 pre-market. 23.11 is going to be the first targets on the XLF. Okay. And that's the story on that. Okay. We're going to take a look at the bonds and the notes really quick. As we look at this, we're going to take a look at the 30-year, stops below 162.22. And as we look at this, I'm still a big fan of going long bonds and notes until told otherwise. Stops below 162.22. Targets initially above at 165 and probably even higher. You know, you look at these rate structures in Europe. You know, I don't really put a lot in what Bill Gross says. He's called for this is the short of a lifetime on the the Bund, the Bobble, the Bund mainly out of Europe's. I think they're probably going to go negative on the 10-year in Europe on the European Treasury instrument there. But remember, these things can do anything, and our treasuries really, when you think it, let's just step back as an investor. Do you go in and if you want to own treasuries and you have to own treasuries, do you go in and buy those European Bund instruments right now? Or do you go in the U.S. market, which is safer? I mean, that's a coin toss, but it's not a tough choice of whether these things should kind of come back into not arbitrage together, but these U.S. treasuries. That's keeping the bid in the marketplace if you think about it, and therefore these things may go much higher, believe it or not. Short of the lifetime on what Gross said about the Bund instrument, I think it's going to ultimately head that way, but I don't. He may be 2 years early. So just it is what it is. Don't try to make too much sense out of it. I know paying someone to put money in the bank is. Paying a bank to put money in their bank is a foreign concept to most folks. It is to me, but it is what it is right now. And the Europeans have some problems, and they're going to keep pumping because we taught them how to do it. They're going to keep printing the money. All right, we got Coca-Cola out this morning. We're going to take a look at that. We're going to get into some stocks in just a little bit here. 41.80 pre-market. So we're up, obviously. This is something we got a new profile, 42.45 unfair highs there. And that's the weekly situation. And on the dailies, we've kind of like started to break stride here. So I would consider targets possibly 42.45. I'm not a huge fan of Coca-Cola right now. It's a multinational. It's got some dollar issues. You got a big transition out of, from a fundamental standpoint, out of the sugar-based type scenarios. They're trying to weather that storm pretty good now. So fundamentally speaking, technically speaking, that's what the deal is. I think wishful thinking it'll be 42.45 on there. Guys, we'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I think we've got Demantis on from Lithuania with us. Demantis, are you there?
Yeah, John, I'm here. Hello. Can you hear me?
Great, man. Yeah, good to hear you. I think what we're going to talk about here, Demantis, if I'm not mistaken, is we kind of have a new concept here that you've basically been the driving force behind. I'm going to kind of pull it up really quick. And this is not the final version by any means, but I want to kind of get you, if you can, this is our scanner. We're putting it up in the den here. What's you're doing the programming for it, so why don't you tell us a little bit about it?
Well, basically the idea behind it is to display, well, what we have now in the categories in the exchanges. Right. We want to display that in the visual manner that would give you more information than you have right now, that everything would be at a glance, and you can just separate what exchanges or what ETFs, as it was initially planned, are suitable for you to start trading in. So it's actually, yeah, sorry.
Go ahead. No, so right now, what I'm showing everybody is this is kind of a mock-up of this will, knowing Demantis, it'll probably get finished tomorrow and in production. He's so quick about these things. But the original concept is, guys, is, a lot of the institutional guys, again, a lot of these concepts are born out of the institutional kind of incubator brain centers. But, as we've talked about, those guys aren't the sharpest pencils in the pack sometimes. But they did come up with a really good idea this time, which is, we want to see a heat map of the ETFs of quite a few of them and find out what's really driving the marketplace up or down. So what Demantis did in the interim was just kind of test on some of the categories that we have already. And this will kind of re-rank them real time, and this is probably too big We're going to kind of play around with this, but it'll let you see all the ETFs in a heat map type format, see the sectors that are driving the market, look at the breadth on the individual sector, and be able to click into that particular point of the heat map, and then your ETF components pop up. So you can find the sector, drill down to the sector, understand if that particular sector, for starters, is breadth positive, negative, or neutral, and then maybe look at some components that might be driving that particular sector. I just think it's ultra cool what you're doing here, Demantis.
Thank you. Well, I mean, I can't take all the credit. I just put it visually for the users, and it's your idea behind it. So great job, John.
You usually do try to take all the credit. That's why I'm saying that, though.
Oh, well, okay. Thank you for letting me have it then.
I'm just kidding.
Yeah, it's actually, I'm looking at it right now. It looks like, when Windows switched to the Metro style, the tiles, Windows 8.
Yeah.
We're reinventing the wheel.
Demantis is one of the most humble guys you'll ever meet, and one of the smartest guys in the room. Seriously, he's fantastic to work with. One of the things I want to do.
And handsome. You forgot to say handsome.
I forgot that part. Yeah.
Next to the humble part.
It's kind of interesting how you have to remind me of that. So you might want to think about why you have to remind me of that. But anyway, let's take a look at the euro, because you're sitting there. Are they still using litas over there, or no? Not at all.
No. Actually, Lithuania switched to euros from the 2015. So the 1st of January, we got the new currency. And actually, I'm interested to hear your thoughts because most of my funds are in dollars, and since I need to trade them to euros to distribute them, I'm actually trying to find the correct time to perform the transactions.
Gotcha. Okay, so that being said, I don't see any scary situations why you wouldn't want to hold on to the dollars as long as you can, actually. This is our long-term view, and that means that my personal thoughts are ultimately this euro is going to go down and down and down, and I think there's a lot of room left on it. So therefore, converting dollars to euros might mean that euros are going to become more and more devalued if you're sitting there holding euros. So sitting there holding dollars might not be a bad thing to do. But here's the kind of the brutal truth of it right now on the daily. We seem to want to not break back down out of this fair auction below 107. Now, we could rally back up into the 110.5 area. That's easily, on the table right now, just like we did before. Eddie was having a time with this, rallying in his face, and he managed that process very, very well. We're going to come back. Can you hang out for just a little bit longer?
Yeah, no problem. I'll be here.
Great.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Demantis, are you still with us?
Yes, John, I'm here.
Great, man. We were kind of getting into the euro here and just doing some analysis. You know, I sound like a broken record probably. People ask me this question all the time. And as we look at the euro, it's almost just never-ending sell resistance and sell breakouts on the downside. And I'm just not really inclined to change that tune. So what you want to hope for, Demantis, is for this to come in even farther, get below. Go ahead.
Yeah, I want it to go down as possible.
I know you. Yeah, I gather that.
Yeah, sorry. Go ahead.
No, I gather that, and because I'm paying you in dollars, and I know you want this thing to get killed. You know, don't freak out. What I was trying to say earlier is you know, if we get back up into 110 and a half, that's just kind of like, you know, the way the ball bounces within the fair auction. I kind of want you to step back a little bit. I'm going to pull up our weeklies, and this is something, you know, sometimes you get kind of caught just micromanaging positions, looking at short-term charts. I mean, I'll be honest with you, like sometimes when I get involved with Nadex, I kind of have to just leave the room for a while because there's so many things flashing and short-term things, and you know, there's binaries. We talked about that a million.
Yeah, I understand. It's very difficult to sit there watching at the charts and not doing anything.
Yeah. So a lot of times, you know, it really will behoove everyone to kind of just pull up the long-term chart, look at what this thing's done. Since 135 and a half, I mean, we kind of, you know, got the close below, retest, boom, inflection points. We haven't crossed any borders significant. 110, 111, that's the major resistance on this. We kind of already tested that DMZ before, and it looks to me, that this is a relatively safe trade based on the historical view here. And if, we'll have another set of long-term inflection points to pay attention to at some point pretty soon. So, until that happens, until that new profile appears, and by the way, price action was below this weekly profile. Remember, we always talk about that. If we get a profile appearing above price action, we're in a downtrend. That's relatively safe.
Yes.
But, we do not have anything new appearing down here, no new demand area. So, I'm not cautiously optimistic. I'm optimistic that this thing will head lower.
Okay, well, that's good to hear. For me, at least. Not for most people, I guess, here in Lithuania, but...
Yeah, I know. It's unfortunate that there's kind of a readjustment of, the euro, the buying power is not there when they kind of start thinking about, overseas type transactions and traveling and stuff like that. But what long-term it's doing for their economy, I don't know where you're ultimately going to live, by the way, so I'm going to call it your economy right now. But
okay.
it is going to allow their internal manufacturing side to really start getting some legs again, and that's just been something that's been artificially, because of some Swiss banker wanting to, do this or do that or whatever. I mean, it's been artificially too high, and now they're just kind of like, doing what they got to do to get this thing regulated properly.
Okay.
I tell you what, man, I'm going to pull up some other things. I really appreciate you being on the show today. That new scanner that I just showed earlier is the bomb.
Yeah, looking forward to that. Finally hitting the shelves.
It's going to be a little bit more micromanaged, and we're going to play around with it. But all the back office situations are there to make this happen, and Demantis actually is behind all this. So. You guys out there that like the scanner or like the concept of it, it's going to get even better.
Yeah, just let me know. This humble guy is waiting for your feedback.
All right. Well, I appreciate you coming on the show, man, and great work. And we'll all be looking forward to getting a new release on it.
Yeah. Thank you, John. Thank you for having me. It was a pleasure.
All right, man. Okay. We'll talk to you a little bit later. Okay, bye. Thanks.
Bye.
And moving on, we're going to take a look at couple of stocks that are in the news. Obviously, there's a lot on the plate here. I'm going to pull up XOP. Somebody didn't ask me to look at that earlier. The S&P Oil and Gas Exploration. This is our weekly. Sorry for the delay, John. This is our weekly. It's not a scary pullback by any means on what's going on. Like as we have kind of turned here on the daily. We've had some support issues here. We talked about being stingy, not stingy. Similar situation to the XLE. And, in my opinion, you're just kind of right in. Let me just see where we're at pre-market here. Excuse me. We're trading 53, let's just call it. So here's a 240 situation. Obviously, the very short-term traders had reasons to kind of get out of that long trade a little bit earlier, but the weekly's kind of ripe. The daily's looking still swell to me. Right now, if you were playing that stop-out game on the XOP, that's great. Now you've just kind of sit tight because you don't have your leverage here. So your leverage is getting down in my mind down to 51.67 or getting back above 54.18. I'm not a big fan of going short this particular product. Couple of stocks we need to kind of cruise through here. AT&T, and I think that this is, let me see here. Well, I can't spell. It's after the market today, but a lot of people are sitting on this in their portfolios. It's kind of a bellwether situation. So let me show you. 32.54 for the lowest on the daily. The weekly, 32.48. So you got 32.50 neighborhood sitting here. This thing's crowding it. There's some people nervous this particular stock. I'm not a big fan of trading before the earnings, right before the earnings, and just rolling the dice. But in my opinion, any type of bad news is going to be a technical just nightmare for this, and we could see much lower numbers. Now, some a very nice lady had called in a couple of months ago about AT&T. We talked about, just it's not the rosiest situation. You've got better buy points down here, and those are sitting down here, but you got to put your stops in. And what we're looking at on the daily is this thing looks extremely heavy, and there's not a lot of excitement coming into these earnings, at least technically speaking. And if we get some kind of bad reaction here or bad numbers, this thing could plow down into. Let me just see if we can find some targets here. $31.76 and much lower, because if we get down in there, I think we're just going to flush just to do it. So pay attention to these numbers on AT&T. We could go much lower than 31.76. And the meeting of the minds in Hong Kong right now. Ben flew in from South Africa. Eddie's there now from Spain, and they're just alerting me they're going out to dinner, so I'm going to be talking to them a little bit later. We've got a couple of the stocks we need to talk about right now. Facebook, this is coming out today. Let's just revisit this thing. We've talked about it a little bit lately. Okay. Looks like we're trading 84. Let's see here, pre-market 84.20, 24, something like that. So, we talked about staying away from the short side on this. This is our weekly situation on Facebook. There hadn't been a lot of reasons to go short. We've been looking at the buy the dip concept, 79.20. I think we were even talking about this day before yesterday. So let's take a look at the dailies here, and you've got some support right now at 83.49. We talked about that getting above there, breaking out. That's happened yesterday. Now we're coming into these earnings, and we're sitting on the highs of the year. So if you're long, I think you're probably going to be okay. Just make sure your stops are in. Long-term stops need to be below 79.27. Shorter term stops 83.49, and then you've got a big buy area between 79.27 and 81.93. But if the long-term situation, you got to be willing to say uncle below 79. Okay. Qualcomm coming out after the close. Let's take a look at this. We're going to have to reboot AWS2, Mike. Just soon. Okay. All right. Here we go. Weekly Qualcomm, 66.52 support on it. And pre-market looks like we're trading 67, 65, something like that. No, actually 68. Is that right? 68.46. I'm sorry. That was a bad print. What do you do with this? Here's the daily. Again, I think you got to let the earnings come out. I don't see a lot of direction in this. I don't see too much technical clamoring to get into this particular stock before the earnings. Let's take a look at the Canadian dollar really quick before we move on. This was one we talked about waiting patiently. This was right in the scanner. This is when we started. I'm sorry, I don't have the currencies up right now. Let me get those up. Let's see here. Let's take those out. Currencies. This was one that kind of showed its hand on the scanner. Eddie keeps this up. He trades a lot of currencies. We've got that 120.58, 59 sitting there, and this was showing bottom right here when this was going on. And why does it show? Excuse me, it was showing top. It was showing top because we got near that weekly inflection point, and we had talked pretty often about not being. Man, my screen is getting slow here. Not being in this long anymore after we had breached this 124.27. All right, and then we kind of had to wait and see what was going to happen. The next buy point was at 120.50 area. So what do you do with it now? Still along, in my opinion, with long-term stops below 120.5. Here's our short-term 240s. I think this thing could head higher now and at least get back into the 124 area. But remember, if you're playing the short-term game and trying to trade this bounce, you still got some inflection points here you got to pay attention to around 122.33. So orient stops around there. If we get down below this 240 again, we could just kind of churn around here. I think the big move has been made, and I think the bounce is in, and I think we could drift higher. Okay. We're going to take a look at BHI. Baker Hughes, this is coming out with earnings. Let me see when those are coming out. Baker Hughes. I'm sorry. Okay. I meant to pull up BK. I'm sorry. BK. Here we go. Bank of New York Mellon. What we're looking at with this one is before the market, looks like that's a real print, 41.40. I don't know if they've actually come out yet or not. This is a bank stock, obviously, kind of bucking the XLF trend. I'm still very bearish on the XLF. 40.56 on for highs on the weekly. That's what you got to really pay attention to on this stock, above or below. Above, longs, below. You might start seeing some washouts here based on if and when the earnings come out. I'm not sure that's out yet. Let's take a look at Boeing. This has obviously got earnings out. We're trading 150-170. So we're a little bit down here, not much. This is long-term on Boeing. I think you're still safe here. It's been a strong stock in a kind of a mediocre market. We're trading pre-market. What is that? 150-170. So still right in the fair auction here. Nothing to be scared about. The long side, you stingy traders could put stops below 150, and I still like this from the long side. And long-term traders, you got to be willing to say uncle below 144. All right, when we come back, we're going to take a look at a couple more stocks and sum up some of the broad markets, and then you're going to get Steve Rhodes. We'll be right back after the break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I'm looking at the Shanghai right now. I just want to kind of bring this into perspective for you. We've talked about this thing just being on, propane. Whew. This is basically a double. Let me see, since, I don't know, man. Is that a double in a half a year? Almost. My goodness. That's a double on an index in a half a year, just to put it in perspective. Talked about not standing in the way of that thing, so I hope nobody did stand in the way of that thing. We took a look at copper the other day. I want to kind of revisit that one. And where are we at with copper? There it is. Lost sight of it. We drifted down a little bit farther. I still think we're in the support area, if you will. This is a pretty violent week for copper. And again, we always talk about picking our battles around these inflection points. Still feel like it's okay to pick the battle here. Still, Navigator's looking relatively good on this one. Unfair highs 2068.33. That's still, put stops around there. I think you just got to keep turning the wrench the same way. You've got something. I didn't really mention this too much. I mean, we kind of had this up here, but Custer's last stance on this is going to have to be below 2.588. All right, if you're going to play around with the noise factor on copper on those unfair highs on the weekly. Let's take a look at the S&Ps one more time here before we end the show today. Well, let me pull up the NASDAQ first, because the inflection points on the NASDAQ, we got a lot of NASDAQ traders out there. I don't mention this enough. This is getting slow. Sorry, guys. Let me pull up our daily chart here. Situation on the NASDAQ is got a little bit more strength to it. Again, I'm not a big fan of buying these. These indices are lagging tremendously. Some of the things that are going on in the globe right now, and money may start coming out of these products, especially with the dollar situation climbing higher. And the earnings reports, not bad, not good at this stage, but I think some of these multinationals are going to start showing their hand, which will kind of verify what we all know already. Okay, we're going to take a couple of looks. We're going to look at Apple again. Had some movement in this down. Nothing to sneeze at, nothing to be concerned about. We talked about this fair auction. I get Apple emails about this every day. I think this is kind of stay the course on Apple, buy the dip. We're going to take a look at GoPro one more time. As this pulls up, we talked about kind of looking at this from the short side around these inflection points, 45, 43. We've pulled back a little bit, 44.31. So we came off $1 since yesterday. I think we could easily hit 42.81 and lower on GoPro. Pay attention to that one. We're going to take one more look at the euro in the last 10 seconds before we go to break. And here we go. Guys, we're going to end the show now. Euro still is short. They'll break out below 107. Sea Roads is next. Stay tuned. We'll be back again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.